Silver just touched $82.60 per ounce, then crashed hard. But that's not the story. While everyone's watching the price chart, something absolutely insane is happening inside the Comex silver vaults. And what I'm about to show you from the official January 5th, 2026 depository statistics is going to blow your mind. In just one day, on Monday, January 5th, over 1.9 million ounces of physical silver was withdrawn from Comex registered vaults. That's nearly 9 tons of silver removed in a single day. JP Morgan alone saw 1.28 million ounces walk out the door. STONEX lost 5.1 million ounces from their registered inventory through adjustments. The total Comex silver inventory just dropped to 449,211,255 ounces. And I'm going to explain exactly what this means, why it matters, and what could be coming next, because this isn't normal. This is historic. But before we dive deep into this data, if you want to stay ahead of these market-moving events, smash that like button right now and subscribe to this channel with notifications on. 97% of you watching aren't subscribed yet, and you're missing critical updates that could protect your wealth. Hit that subscribe button now. Let's get into it. First, let me explain what we're looking at here, because most people don't understand how the Comex precious metal system actually works, and the institutions manipulating these markets are counting on your ignorance. The Comex is the commodity exchange, where silver futures contracts are traded. It's the primary price discovery mechanism for silver in the world. But here's the critical part. Most of those futures contracts are paper contracts. They're promises to deliver silver, but the actual physical metal doesn't change hands. The Comex maintains physical vaults run by major banks and depositories. These vaults hold actual physical silver bars. And this silver is divided into 2 categories, registered and eligible. Registered silver is metal that has a warrant attached to it. This means it's officially available to satisfy futures contract deliveries. It's the deliverable silver in the system. When someone stands for delivery on a futures contract, registered silver is what gets delivered. Eligible silver is metal that meets Comex standards and is stored in Comex vaults, but it does not have a warrant. It's not available for delivery unless the owner decides to convert it to registered status by issuing a warrant. Think of it this way. Registered is like money in your checking account ready to spend. Eligible is like money in your savings account. It's there, but it's not immediately available for transactions. Now here's why this matters. The total Comex silver inventory dropped to 449 million ounces. But registered silver is now only 127 million ounces. That's the silver actually backing the paper contracts. And on Monday, January 5th, we saw massive movements in both categories. Let me break down exactly what happened. Let me walk you through the official Comex Metal Depository Statistics report from January 6th, 2026, showing activity from January 5th. Starting with JP Morgan Chase Bank, they had 1.28 million ounces withdrawn from their eligible inventory. But they also had 179,000 ounces adjusted out of their registered inventory. Their total registered silver dropped from 16.3 billion ounces to 16.1 billion ounces. That's JP Morgan, the largest silver vault holder in the Comex system, losing over 1.4 million ounces in a single day. Moving to Asahi Depository, they received 531,000 ounces, but they had 278,000 ounces adjusted out of registered status. Net result, registered inventory decreased. At Brinks INSEE, 480,000 ounces were withdrawn from eligible inventory, and 171,000 ounces were adjusted out of registered. C&T Depository saw 828,000 ounces received into registered, but 927,000 ounces were received into eligible. 245,000 ounces were adjusted out of registered, and 137,000 ounces were withdrawn from eligible. Delaware Depository had 1,097 ounces withdrawn from eligible. Now, here's the most shocking one. STONEX Precious Metals. 5.1 million ounces. Adjusted out of registered inventory, that's a massive decrease in deliverable silver. When you add it all up, total registered silver is down 880,000 ounces. Total eligible silver is UP 880,000 ounces. Total silver withdrawn from the system is 1.9 million ounces. The combined total Comex silver inventory is now 449,211,255 ounces. The registered silver available for delivery is now only 127,185,963 ounces. Now, let me explain why this is absolutely critical and why you should be paying attention. Implication. Number 1. Physical demand is real. When nearly 2 million ounces of physical silver gets withdrawn in a single day, that's real demand. Someone, somewhere, wants actual metal, not paper promises. They're taking delivery and removing it from the Comex system entirely. This could be industrial users who need silver for manufacturing. It could be sovereign wealth funds accumulating physical precious metals. It could be large investors who don't trust the paper markets, or institutions preparing for a currency crisis. Whatever the reason, they want the real thing, and they're draining the vaults to get it. Implication number 2, the registered squeeze. Remember, only registered silver can be used for futures contract deliveries, and registered silver just dropped by 880,000 ounces, while total silver dropped by 1.9 million ounces. The registered category now sits at 127 million ounces. Sounds like a lot, right? Wrong. There are currently hundreds of thousands of silver futures contracts open. Each contract represents 5,000 ounces. If even a small percentage of those contracts stand for delivery, the registered inventory gets drained fast. We're seeing inventory leave faster than it's being replenished. That's not sustainable. Implication number 3, the price disconnect. Here's where it gets really interesting. Silver touched $82.60. That's a massive move. Yet, with all this physical demand, with vaults being drained, the price crashed back down. How is that possible? How can physical silver be flying out of vaults while the paper price drops? This is what many in the precious metals community call manipulation. The paper futures market is being used to suppress the price, even as physical demand skyrockets. Traders are shorting futures contracts, creating artificial selling pressure while the physical metal disappears. But here's the thing, this can't continue forever. At some point, the physical reality has to align with the paper price. When the vaults run low enough, when registered silver gets critically depleted, the paper shorts won't be able to deliver. That's when you get a short squeeze. That's when prices explode. Implication number 4, STONEX's massive adjustment, 5.1 million ounces adjusted. Out of registered at STONEX is huge. Why would they do this? Adjustments from registered to eligible typically happen when the warrant holder decides they don't want to make the metal available for delivery anymore. Or they're planning to remove it from the vault entirely. Or they're repositioning ahead of expected market movements. This suggests someone with a lot of silver at STONEX doesn't want to play ball with the Comex delivery system anymore. They're protecting their metal. This isn't the first time we've seen major vault movements. Let me give you some context. In 2020 and 2021, during the first silver squeeze movement, we saw similar patterns. Retail investors, coordinating on forums like Wall Street Bets, started buying physical silver and silver miners. The goal was to drain the physical supply and expose the paper manipulation. The Comex registered inventory dropped dramatically during that period. At one point, registered silver fell below 100 million ounces. The squeeze didn't fully succeed because the price manipulation continued, but it exposed the fragility of the system. Now we're seeing it again, but this time the movements are even larger. The January 5th, 2026 withdrawals are among the biggest single-day movements in recent history. And here's what's different this time. The macro environment has changed. We have inflation still elevated globally. Central banks are buying gold at record rates. Geopolitical tensions are at multi-decade highs. There's a new administration in the United States with very different policies, and there's growing awareness of precious metals as inflation hedges. The fundamentals supporting silver demand are stronger than they've ever been. Industrial demand is growing because silver is essential for solar panels, electric vehicles, and electronics. Investment demand is growing because people are losing faith in fiat currencies. So what does this mean for silver prices moving forward? Let me give you several scenarios. Scenario 1. The squeeze continues. If physical demand continues to drain the vaults, and if registered inventory keeps falling, we could see a supply crisis. When registered silver gets low enough, futures contract holders who want delivery won't be able to get it. They'll have to buy on the spot market, driving prices higher. The shorts will scramble to cover. This is the classic short squeeze scenario that could send silver to $100 or higher. Scenario 2. Price suppression continues. The powers that be in the paper markets continue to suppress the price through heavy shorting, despite physical demand. This works until it doesn't. Eventually, the disconnect becomes so large that the system breaks. But in the meantime, it creates an incredible buying opportunity for those who understand what's happening. Scenario 3. Regulatory intervention. If the situation becomes critical, regulators could step in. They might change margin requirements, limit deliveries, or even suspend trading. This happened with nickel on the London Metal Exchange in 2022 when prices exploded. It's a nuclear option, but it's on the table if the system is at risk. Scenario 4. Gradual rebalancing. New supply enters the vaults from miners and refiners. Eligible silver gets converted to registered. The system stabilizes at a higher price level. Silver finds a new equilibrium between $80 and $100, supported by strong physical demand. My personal view? I think we're in the early stages of a major repricing event for silver. The $82.60 spike wasn't a top, it was a warning shot. The physical market is trying to break free from the paper market manipulation. The vault data we're seeing is evidence of this. When metal leaves the system this fast, it tells you that smart money is accumulating physical. They know something. They're positioning ahead of what they believe is coming. So what should you do with this information? First, understand that I'm not a financial advisor. This is educational content, not investment advice. You need to do your own research and make your own decisions. But here's what I'm watching. Watch the vault data. The Comex publishes this data regularly. If we continue to see massive withdrawals and if registered inventory keeps dropping, that's a strong signal that physical demand is overwhelming paper supply. That's bullish for price. Watch the spreads. Look at the difference between spot prices and futures prices. If futures start trading at a premium to spot, that suggests delivery stress. That's a warning sign. Understand the difference between paper and physical. If you're investing in silver, are you buying physical metal or paper derivatives? Physical silver you can hold is very different from a futures contract or an ETF. Physical is real. Paper is a promise, and promises can be broken. Consider dollar cost averaging. If you believe in the silver thesis, consider building a position over time rather than trying to time the market perfectly. The volatility we're seeing means trying to catch the bottom is nearly impossible. Regular purchases smooth out the volatility. Think long term. This isn't about making a quick profit. This is about wealth preservation. Silver has been money for thousands of years. It's a real asset in a world of paper promises. Whether silver goes to $100 or $1,000, owning physical precious metals is about protecting your purchasing power over decades. Stay informed. Follow channels like this one that break down the data and explain what's actually happening. The mainstream financial media won't give you this analysis. They're too tied to the institutions that benefit from the current system. The January 5th, 2026 Comex Silver Vault data shows 1.9 million ounces withdrawn in a single day, 449 million ounces total inventory, 127 million ounces registered. These numbers matter. They tell the story of a market under stress, a market where physical reality is diverging from paper price. Silver touched $82.60, then crashed. But the smart money is accumulating physical metal while prices are suppressed. The Vault data proves it. This isn't investment advice, but it is a warning. Pay attention to what's happening in the physical markets. The paper markets can lie, the Vault data doesn't. If you found this video valuable, hit that like button, subscribe to the channel, and drop a comment letting me know what you think is happening with silver. Are we heading for a massive squeeze, or will the manipulation continue? I want to hear your thoughts. Thanks for watching. Stay informed, stay prepared, and I'll see you in the next video.